Hey everyone, welcome back. And just let's do a very quick sound check. I'm working with a really weird connection here. We kind of had a nationwide outage on the connection here, so I'm not sure if this is coming through okay, but it should be coming through okay. But let me know, especially Octa's team, if you guys are noticing any drops in frames from my side. It seems to be doing okay. Audio seems to be coming through okay, but if there's an issue, I can try to shut off my camera and see if things works out fine. But yeah, for now, I think it should be fine. But let me know if there's any issues. I do see my pictures breaking up a little bit, but hey, hopefully we are going to be looking at the charts nicely here. Okay, all right, so welcome back. And let me just switch this a little bit. There we go. Okay, so welcome to our news trading session. This is going to be our theory and practice sessions. And obviously, we want to talk about the market conditions and some of the decisions that we made last Friday. Why did we reverse the trade? Why didn't we do all the straddles, for all the currency pairs, for example, or all the assets that we look at on Friday during the NFP sessions? So we're going to cover that during the theory sessions tonight. So let's get this started. My name is Vito Angelo, and hopefully it is coming through okay. But if there's an issue, do let me know, okay? I think what's important here is not my camera looking okay, but hopefully the screens are coming through okay. All right. Just a quick disclaimer, any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility, and market reaction to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. So be very attentive when determining the volume of your transactions and consider all possible risk factors. Okay. As per usual, I'm going to show you the code to double your deposit bonus. That's going to be the bonuses for participants in these sessions. Even if you're not watching it live, you should be able to get access to the code as well. Also, if you registered through the website, you should be getting a link on your email for the Telegram channel. Or if you have attended our previous sessions, you should already have that access. But if you don't register, you watch this a little bit later, you didn't watch this live, you're probably watching the recording, and you want to be part of the Telegram channel, please contact Octa's customer service. They'll be more than happy to help you out with that, okay? Okay, so this is the code. It's non-farm 2025. It is valid until the 31st of December 2025. This is to double your deposit bonus. Obviously, terms and conditions apply, so make sure you ask the team what those terms and conditions are in terms of how you use the bonus and whether or not it can actually be withdrawn. I think there's actually a minimum trading volume before you can actually do that. So just keep that in mind. All right, just a little bit about myself. I've been a full-time trader with over 20 years of experience. It will be 23 years actually next week. And I've been a professional trading coach and technical analyst since 2007 for several major global brokers in across the world, in the US, Japan, as well as Australia, where I am. My expertise is in the Ishimoku Kinko technique, and I've been invited as a guest speaker at the Trading Investing Expo across Australia, Invest Fair in Singapore, as well as the ATA and the APTA conferences. All right. So we will talk about the theory tonight. So we want to definitely break down the advantages and disadvantages of news trading. There's a lot of things happening right now. In fact, I think every single day about 5 to 7 p.m. US New York time, I think we are reacting to news trading. It's just that a lot of them are unscheduled news, depending on Trump's mood at this point in time. But yeah, we'll talk about that. What are the advantages, disadvantages, and also the most profitable news for trading as well. And then we will take a look at the technical side of how to actually trade the news. We will take a look at the three main phases of price movement, and this is three main phases that will happen. It's undeniable that it will happen, and you will come across these three main phases. And this is the reason why we want to focus a lot on this. Otherwise, it's actually not going to be possible to trade the news if you don't understand those phases of price movement. Okay. Some general rules for news tradings, and then we'll talk more about the pending orders. What are the different type of pending orders? when and how to use them. In fact, we will take a look at a lot of example on the limit orders, which is actually very rare that we have that opportunity. But yeah, those are basically what we are going to be covering on tonight. Okay. All right, let's talk about the advantages on news trading first. So basically, all the necessary information can actually be found in the economic calendar. So there is no need to delve deeply into technical and fundamental analysis. When it comes to news trading, it is very different from fundamental analysis. It skews towards fundamental analysis, but it is actually not fundamental analysis. Now, in terms of economic calendars, there are actually a lot of options there. You can actually use this, the one that's actually on Octa's website. All right, you can actually go to Octa FX website, and under education, I believe it's under education, there's actually an option for economic calendars, but you can use the free ones. A lot of FX traders, since the very beginning of online trading, have been using Forex Factory. You can use that if you want to, but I prefer using Trading Economics. I think there's a lot more details. You know, there's even forecasts in there, which is done by the team there as well. So I think there's a lot more details on Trading Economics. So I think if you just start, you know, if you just started out in trading, you can use the simple ones. That's completely fine. But as you start going deeper into news and understanding the fundamentals, then yeah, you probably want to level up what tools you want to use as well. Okay. What news are we trading tonight? We actually are not trading any news tonight. I think the news tonight would actually not come in until about 3 hours time. That's I think about 10 a.m. New York time, when there's a testimony done by Jerome Powell, which is the FOMC chairman. But yeah, we will take a look at some of the technical theories behind that, but we will, you know, give you a little bit of an example into what it is. Okay, but we will be trading the live CPI numbers tomorrow. That's going to be the inflation number. That's actually tomorrow. It will start an hour a bit later than tonight's session, so just make sure you got the timing right. We will start half an hour before the CPI is released, so make sure you understand when that is happening. Otherwise, you're going to miss out on that CPI trades. But yeah, we're looking at the CPI trades tomorrow. Okay, now let's continue on with the session tonight. The second thing, I think the second advantage here is that the events in the calendars are ranked in order of importance, which helps in making adequate decisions. Not all news are created equal, and I keep saying that every single month. And you know, sometimes even important news are not going to move the market, because you know, the market works on context. Okay, so if we don't understand the context of what's happening in the market, you know, what's the main focus? Okay, for example, last week's number, you know, we had that lower NFP number, and then but the initial market reaction was one directional, but we understood the context, right? And we take a look at all the other data that comes with it, as well as the revisions, and we reverse our trade, and we were right. We had to reverse our trade, otherwise we'll be bleeding a lot of losses last Friday. So yeah, rank in order of importance. Not all news are going to be created equal. Some news are going to be low impact. Some of them are going to be medium impact. You know, and then the high impact news like the CPI tomorrow, the NFP numbers last week, those are high impact news. Okay, but what I'm trying to say is sometimes we get a medium impact news that could cause a lot of noise in the market. Sometimes we get a high impact news that met consensus and it doesn't move the market, because I think the market is already priced in for a lot of that stuff. But we typically discuss about this news, what we anticipate, every Monday during the Outlook sessions, which is a video that we push out. And so make sure you check it out every Monday. Basically, we publish that Outlook every Monday, and we do talk about when data are going to be released, what are we going to be focusing on. So those, you know, we're already giving out a lot of help there for a lot of new traders there. Okay, but yeah, I think that's an advantage, that we can actually know or anticipate which news to be traded. And you know, sometimes some of them are not going to be market moving events, and we don't really want to waste our time sitting in front of the computer waiting for a non-event. Okay, publication of statistical reports noticeably increases volatility. This allows traders to potentially earn significant profits in a short period of time. Of course, it could backfire. as well. We'll talk more about that on the flip side, once we gone through the advantages. But what really differentiate trading and investing is actually the volatility. Okay, traders, we like volatility. If we don't have volatility in the market, we have to wait quite a while for our position to get into our targets, right? The volatility drives that a lot quicker. So if we get it right, we can aim for a much bigger move in the market, or we can aim for a quick profit in the market and just get out from the market really quickly. That's the volatility that traders are going to be looking for, okay? Especially day traders. We basically look at volatility when market kicks off, right? For example, the American market, it's not going to start now. The American market is going to open in about an hour and 15 minutes. That's when we saw a lot of volatility in the market. So I think a lot of traders are actually anticipating those market opens. So you see a lot of volatility during the European and the UK Open, for example. Asian session really depends. If there's not a lot of market moving leftover events from the US session, we don't actually see a lot of volatility during the Asian session for a lot of the currency majors, okay? Okay, the next advantage in terms of niche trading is the strategy is very simple. It's basically a no-brainer. We're going to go through some of the strategies tonight, right? What are we using? We're basically using pending orders. When do we use them? That's why we need to take a look at the three main phases tonight. But once you understand that, and during the NFP sessions, we did talk about a couple of ways to trade the NFP. But it boils down to basically about the same strategy that we're going to be covering tonight. So once you understand the phases of the market, then yeah, it's not hard. It's actually super simple in terms of how to trade the news reaction, right? And I think the major advantage here is that there's minimal time expenditure on your trading. As I said, you don't really want to be sitting in front of the computer the whole day, right? You want to really take advantage of the right moment to be opening up your positions, when to close your positions really quickly and whatnot. So with news trading, you know when exactly to access the platform, right? For example, tomorrow, I said, be ready half an hour before CPI. And that's it. You're in front of the computer or in front of your tablet or in front of your mobile phone. Make sure you're looking at the chart there. Just be on standby. About 30 minutes before the news is released, that's where we kind of figure out, okay, what should we do, right? How do we position ourselves? We don't really want to spend 6 hours waiting for that news. We don't need to, because we're trading the news and we want the volatility that happened when the news is released, not the 6 hours before the news is released, okay? So minimum time expenditure, right? You know when to open your chart, you know when to access the trading platforms, and the trading strategy itself, again, it's all pending order based. We typically set our trades for our live trades about 5 minutes into the release of the data. The closer the better, as long as you can work quickly with that. If you're new, then I think about 10 minutes or 15 minutes before the news is released, you start setting out your positions. I think that's okay. But as time goes by and you get used to news trading, really, it only takes us about 3 minutes to set up our positions, and that's pretty much it. That's how simple it is, okay? All right, let's talk about the disadvantages first. Market situation doesn't always develop as predicted by logical thinking and common sense. Now, it's not really illogical. It's just that it might come across as illogical. And a lot of this comes down to not understanding the context of the market, not understanding what to anticipate from the data that's actually being released. So let me give you an example. And you can review our trades on the NFP and the unemployment rate last Friday. The video is still there, it's still fresh, right? But yeah, please review it and you'll understand what I'm trying to say here. It's not illogical. In technicality, it's not illogical. But to a lot of new traders, it doesn't click. It doesn't make sense, okay? So, for example, a lot of focus is going to be on the NFP last Friday. And the NFP last Friday was actually below consensus. It was 30,000 below consensus. The release, I believe, was about 143,000. Market was anticipating 170,000. So the NFP was bad. Right? The initial reaction was correct. The US dollar weakens, but not even 1 minute after that news is released, the whole market just reversed on itself. Now, to a lot of new traders, new traders, not news traders, to a lot of new traders, this doesn't make sense because we're looking at the NFE numbers and the expectation was for a higher NFE number and we fall short, all right? The number released was below consensus. So technically it should weaken the US dollar, but last Friday, it didn't happen. In fact, the US dollar kind of strengthened after that. After the initial 1 minute, I believe it wasn't even 1 minute, and then the whole market just kind of lose momentum. It swings very volatile, and it takes out the top at the bottom, and then it just hangs on for a little bit, and then it reverses for the whole night. So sometimes it doesn't make sense. If you don't understand the context, it will not make sense. Okay, so that's disadvantage number one. The strategy is simple, but you still need the context, and this is why we're doing this every month, just to help you out with understanding the context and understanding what to anticipate. So whether or not that's actually a disadvantage, I still put it in there as a disadvantage, but we're doing a lot to take that disadvantage and neutralize it for you guys. Okay. All right, disadvantage number two is that not all news can cause significant market reaction. I already mentioned that. That's part of the advantages as well. So if you look at the wrong news, then yeah, you can't anticipate a low impact news to cause a lot of volatility in the market all the time, 100%. That's not going to happen. But if we're looking at the high impact news, then yeah, maybe about 80% of the time it will cause high volatility in the market. So make sure you're looking at the right news, number one. And number two, again, we're talking about the context here in terms of what the market is expecting and what the market has already priced in. If everything is as per market's expectation and every trader has priced in for that possibility, then there's not going to be a lot of market reaction. So I think that could be a disadvantage because you might have positioned yourself for a trade, you got all excited for it, and then boom, nothing happened, right? Okay, now the last disadvantage, I want you to be clear with this one here. You can earn significant profits in a short period of time if you get it right. But if you get it wrong and you over leverage, you open a position that's too big for your account, you could blow up your account. So I think this is a major disadvantage. And I want to stress this out to you guys. I've been mentoring thousands of traders by this time. All right. I've been doing this for more than like 2 decades. And trust me on this one, when I say 70% of new traders, the way they blow up their account, it's NFP, right? 70% of them blow up their account during the NFP news, okay? So that's how significant that news is, especially for Forex traders. Now that 70% is attributed to Forex traders. And I can assure you on this one here, 70% of traders that I've trained, traders that I've helped, traders that I've worked with, they blow up their account when news trading during the NFP. So if you get it right, it's good. If you get it wrong and you over leverage, you will destroy your account in basically that one night. So I think that's actually a major disadvantage. And this is the reason why we keep telling you guys, there's a warning, there's a disclaimer at the very beginning that if you want to be trading the news, it's your own risk, right? It's not going to be on our side. It's not going to be on our risk. If you're going to be following the trades, it's going to be on your risk. And that risk is attributed to whether or not you're over leveraging your position. So make sure your position size is correct. Otherwise, it's actually very dangerous. Okay, so I just want to stress that out really clearly. Okay. Hello, Prakash. Okay. All right, let's talk about the most profitable news for trading. And I basically want to divide this into 2 categories, okay? We got the hot, unexpected news, and that could include terrorist attacks, military conflicts, natural disasters, And I would add right now, whatever Trump says, basically Israel was waiting for Trump to come on there. I think right now the issue there is with the hostages. Are they going to be released by Hamas and whatnot? And that's going to be the unexpected news. We don't know what is actually developing there. We cannot predict that, right? Even if we can anticipate, that's not going to be a good probability. That's number one. Number two, all the tariff talk that's been happening, right? We got the reciprocal tariff that's currently being implemented on potentially all steels coming into the US, for example. That's 25%. And then there was that talk about Canada and Mexico last week, 25%. And they renegotiate. They say, hey, you know what, give us 30 days. And it's a lot of things are happening. And as I said, you know, we're looking at 5 to 7 p.m. New York time, Eastern time in the US, where I think Trump starts yapping, right? So there's a lot going on after market. So that's a lot of movement during the Asian session as well. So just keep that in mind. Those are going to be unexpected news. We don't know what Trump is going to say. Okay, we can anticipate we might get some leaks on what the administration is going to say, but sometimes Trump just goes off the script on this one here. So I would say, you know, for the next 100 days, you got to be really careful here in terms of what Trump can say and Trump will say. All right. The other thing is what we would call the periodic news. These are going to be your scheduled news, right? So just give me 1 second. I'm just checking the connection here if I'm still doing okay. I think I'm still doing okay, but just give me 1 second. Okay. Right. So we got the periodic news. These are news that comes out regularly. This is what we're trading. This is all the news trading that we're going to be focusing on. Okay, so central bank meetings, monetary policy decisions, you know, Forex market reacts to them when they raise all over interest rates. Like last week, the Bank of England cuts interest rates by 25 basis points. There was a discussion about 50 basis points. You know, FOMC wasn't moving much last week, 2 weeks ago as well. So these are the kind of things that we are anticipating. Last month, we got Bank of Japan hiking interest rates. You can see how the dollar yen falls. You can see how the Japanese yen strengthens on the back of that. So central bank meetings and monetary policy decisions, they have a huge impact into the market. Those are scheduled. It's not like we don't know when they're actually going to be announcing their interest rate decisions, right? So no excuses here. Quarterly GDP reports. We're anticipating GDP reports from the UK this week, all right? Inflation indices. So we've got the CPI, we've got the PPI. This week, we're going to be looking at the CPI and the core inflation number tomorrow. We will be trading that live. So these are scheduled events. So there's no excuse that, oh, I didn't know that CPI is actually going to be released. If you didn't know, that's going to be on you that you didn't check what's actually moving the market. And I think this is one of the fatal flaws that a lot of traders tell people, right? What I think a lot of traders tell people is that, hey, you don't need fundamental to trade the market. Everything is technical. Sure, I think a lot skewed onto the technical side when you position your trade, but what moves the market is still going to be fundamental. And this is why we're doing the news trading session, especially the theory and practice sessions, okay? Right. ISM Manufacturing Index, PMI, Purchases Managers Index. So it's going to have an impact onto the market as well, because what we see there, you know, it leads up to the GDP. It will have an impact onto whether or not the economy is actually growing or whatnot. Okay. Okay. So, did I just went dark? Okay. So let me know if the connection is coming through okay, because I'm looking at red bars here on my streaming. Should be coming through okay. Hopefully it's not that badly impacted. Hopefully audio is still coming through okay, but let me just do a quick check. Yeah, okay. I think we're still good. At least you guys are still hearing me. If it gets worse, please tell me. Stop me, tell me, and I'll take down the video so you know we have much better stream. I think it's much more important to understand the context rather than looking at my face. Okay. All right. Unemployment data. This is something that we trade last Friday. All right. The NFP numbers. So we look at that as well. You know, it does move the market a lot as well. Okay. Okay. So let's focus on the three main phases of price movement. We basically have what we call the accumulation phase, the participation phase, and the distribution phase. Why we call it this, right? Why do we name it that? You know, if we take a look at that, it looks like a sideways. It looks like there's a little bit of a change in trend, and then there's all of a sudden there's a strong trend in one direction. But we want to name it, and we want to understand the idea behind the phase on why the market is actually doing that. So number one, when the market is moving in a sideways range-bound market condition, we actually call them the accumulation phase, right? The most informed and forward-thinking insiders enter here. They have information about what to anticipate from the market, okay? They have a team of researchers or analysts to take a look at the market and give them a view of what it is, and then they act on that. So a lot of information, a lot of resources actually goes into that. So well, if you want to call it, if you're developing a product, it'll be the R&D department. So the R&D department, in our case on this one here, would be the research team and analysts. We are actually going to be the one that's looking at positions to enter during the accumulation phase. Now, this is where the big funds actually enter the market. And why do we call it accumulation? Because in theory, this practice actually comes from the stock market, that if you want to have a position, because of the liquidity there and position size in the market that these big funds are trading, typically a lot of their orders are not going to be filled in one single trade. This doesn't impact us retail traders, because our position size is really small. Even when a lot of retail traders thought, hey, I'm opening a large position here, it's actually not that big compared to all the big funds. Okay, so in order for them to accumulate a position, for example, if they want to start buying the dollar yen, so I'm just taking this as a reference on the Forex market, there's what we call the carry trades, right? When the market moves in a sideways market condition, a lot of them just load up on the dollar yen every single time there's a dip in the market. So this is where we saw the accumulation phase happen. Okay. Now the participation phase is basically when we saw a technical breakout. So if we saw a breakout of a support and resistance, those that understand technical analysis will jump on that trade. Okay. So accumulation basically are people that has extra information, or they get the information early. Participation phase are basically technical traders that look at a potential change in market direction, a potential change in the trend. Those are basically traders that participate into that trade. And then the third phase is when everything starts rallying up. Now, this is what we call the distribution phase, because participants here are basically public that enters with outdated information. So let me give you an example. If I were to give you an example that has happened in the past 5 years, I think the crypto market would actually be one. Okay, so I think a lot of traders has actually made a lot of money in the crypto market. For example, the market is already rallying up. And then they start creating content, or they start telling their friends, hey, I just made a lot of money in the market. I think you should be buying this and whatnot. So all these other traders starts coming into the market. And because they hear what other traders are making, they push the market up really quickly. But this is where it gets dangerous, because this is why we call it distribution. Those traders with the big funds, when they enter the position during the accumulation phase, remember, it takes a while, or it takes a couple of positions for them to fully complete their position accumulation, right? At the same time, they're not able to just click sell and let go of all their positions. So they need all these buyers coming in late into the market to actually buy their positions, right? This is actually where people are actually taking their profits. So distribution phase, it's very hard for you not to be able to understand this. This is where you see a sharp move in the market, and then it reverses very, very quickly, because a lot of profit taking are happening. Okay, so remember the three main phases. We got accumulation, participation, and then we've got distribution. Okay, so these are going to be the three main phases of price movement. So just keep that in mind when trading the market here. Okay, all right, just double checking the connection here. Looks good on my side, so let's continue on. Okay, hopefully we don't have any issues here. Hopefully it's sorted out tomorrow. But yeah, we have been having issues here in Sydney for the past 2 days. So there's a little bit of an outage on the national broadband network. A lot of providers are actually affected by it as well. Okay, so hopefully we are pushing through okay here. All right, a couple of general rules for news trading as well. It's good to study the market and analyze the dynamics of a currency pair. So if you want to trade the dollar yen, make sure you understand what moves the dollar yen, what really drives the dollar yen. If you're trading the euro and the sterling, you need to understand how all these tariffs are going to impact the euro. Are they going to be impacted a lot more? Who does trades with the US a lot more, whether it's actually the Eurozone, whether it's actually the UK side of things, right? So you got to study the market and analyze the dynamics of this currency pair. Just make sure you do some research on this. You can go blindly, but it's highly recommended that you focus on a couple of currencies first, for example, or a couple of assets, and you understand what drives these assets. Because if you don't understand what drives them, it's actually going to be really hard for you to be able to news trade this. Okay. Now you also have to assess the reaction of a currency pair to the latest news. For example, last week's NFP number, we were focusing a lot on the dollar Canadian, but that one didn't get triggered. Right, all the other trades got triggered. Dollar Canadian wasn't triggered. Then we have to make a decision. Do we want to keep the trades? Do we want to keep the pending orders, or do we just want to cancel those orders? So we have to assess that reaction immediately. Okay. Right. And then number 3, we have to prepare for trading by marking relevant levels on the chart. So if you're not looking at the key level in the market, it's quite pointless. Okay. So you also need to decide on your trading tactics, including when to open and close the order. And you need to also choose an appropriate trading time frame. Are you going to be trading this on a 5-minute time frame, 15-minute time frame, an hour, daily time frame? Make sure you choose the right time frame. Typically with news trading, we look at the 15 minutes time frame. Those are the general threshold for news trading. Very rarely that we would go anywhere beyond the hourly time frame. I think 15 minutes to about 5 minutes, those are going to be the good ones. Okay. All right. Also, you need to determine the maximum risk for each order and consider using stop loss and trading stops as well. Make sure you understand what you're risking before you jump onto that trade. And then lastly, you need to decide on the terms of the deal, whether it's actually going to be a quick trade or is it going to be a long trade that's going to last more than an hour. Okay. Okay, let's move on, and I want to show you the examples on the pending orders. We basically have a lot of order types, but this is not going to be the focus on this one here, because I think last time we did the theory session, someone was actually asking if I were trading on the MT5 on Octa, there's actually a buy limit pending order, buy stop limit, but there's actually a buy stop limit or a buy limit stop. Okay, but we want to focus on this for first. It could get really confusing. Okay, but anyway, the buy stops are basically order placed above the current market price, and you expect price to continue to rise up and hit that level and continue to go up. Then you want to use a buy stop. So basically, what we're looking at with the buy stop here is that if there's a resistance breakout, you want to be looking at using the buy stop. If you anticipate a support breakdown, then you want to use the sell stop, because those are going to be orders below the current market price. And if you think price continues to slide down and breaks that support, you want to have a sell position. Those are going to be your sell stop. Okay, so buy stop is if you anticipate a breakout to the upside above support, above resistance, and sell stop is basically if you expect support to be broken, you want to use the sell stop. Okay, now the limit orders are the opposite of that. So the stop orders are basically going to be hitting it, and then it's going to run in that direction. The limit orders is actually the opposite. So if you think the market is going to hit that resistance and then fail to break out, you want to place a sell order at the very limit. Okay, this is the reason why we call it sell limit. So this are going to be order placed above the current market price, and you expect price to fall down once it hits that limit, you want to counter whatever the movement is in the market, you use the limit order, okay? And as I said, sometimes when we do these sessions, it's very hard to find a limit order example, but we have a lot of limit order example that we can actually use tonight, okay? All right, so the buy limit is the opposite. If you expect support to hold and price is going to bounce off that support, then you want to use the buy limit to buy closer to that support level, okay? So these are your pending orders, and these are your examples of pending orders. Let's take a look at the buy stop and the sell stop strategy. This is what we call the straddle strategy. So we basically need to look at the consolidation phase, which is the accumulation phase. If we don't have this corridor of volatility, or if we don't have a range bound market condition that goes on in the market, we're not able to place the buy stop and sell stop strategy. So this is requirement number one, and this is the reason why I don't do it for all currencies during our news trade. If we get it, perfect, but if we don't have that corridor of volatility, if we don't have that accumulation phase, if we don't have that consolidation phase, then we cannot do our buy stop and sell stop strategies, okay? The strategy here is very simple. Once you have that corridor of volatility, you want to place a buy stop above the range, and you want to place a sell stop below the range at the same time. So basically, we don't care whether the market is actually going to move up or is it going to move down, but the initial reaction to the market news release typically pushes the market in one direction, okay? And we want to catch that. This is the reason why we kind of just create that net. We're basically casting a net on the market. If it breaks to the upside, we want to buy. If it breaks to the downside, we want to sell. And this is our buy stop and sell stop strategy. So we place two pending orders, and if one hits, for example, in this example here, the buy stop is triggered, you have to immediately cancel the sell stop. You don't want to have the buy stop and the sell stop running at the same time to prevent whipsaws in the market. Like last week, if we don't close our positions quickly enough, it will actually hit our buy stop, and then it will hit our sell stop, and we are going to be hedged negatively. So make sure you understand what's going on here. So number one, we look at the corridor of volatility. Then we create the buy stop and the sell stop, okay? Once it breaks, once one of the orders is triggered, you close the other position, you set your stop loss, you set your target levels, and then that's it, all right? What's nice about this and the beauty behind news trading here is that because the volatility created when the news is released, it moves the market significantly in one direction, and typically it will move away from your entry price very quickly as well. This is when you can actually move your stop loss to break even. It becomes a risk-free trade, okay? So just keep that in mind. I think this is an advantage when using the buy stop and the sell stop strategy. All right, let's do some practice, and let's go on to the chart, and I'll show you the buy stop and the sell stop strategy. Now, I want you to take a look at the Euro USD here. This is on the hourly time frame, and if we focus, just do that. Give me 1 second. Where is my, actually, just give me a second. I don't think I've put in the rectangles in there, but yeah, there we go. I want you to focus on this area here. There's a little bit of an order block building up here, okay? So this area here, and I will just highlight that. Okay, so that area there, this is something that we're focusing on the market here. This is on the Euro USD. Okay, I might be able to zoom in a little bit. You can see that we anticipate a little bit of a resistance building up here on the Euro USD, but we also have that corridor of volatility that we were talking about earlier, right? If you can see the market here, let me just overlap this. and maybe I'll not fill this so you guys can see the box itself. Just give me 1 second. There we go. Okay, so this area here, this is actually our corridor volatility. We also have a very strong resistance up top. So this one here is actually not that hard, and you actually don't need a news to trade this. But what you want to do is you want to create a buy stop. And the easiest way to create a buy stop, if you're using the desktop MT4 and MT5, is actually to just right click on the market, sorry, on the chart, and then there's an option. If you click it above the current price, it will show you the buy stop and the sell limit. If I were to go down below the price level and I right click it and go to trading, you know, it gives me the buy limit and the sell stop. I want to use the sell stop. Okay, this is basically what we want to do. We want to cage the market. We have a buy stop and we have a sell stop. Once price breaks above this, right? For example, if price breaks through, oops, let's see, if price breaks above, then it will trigger the buy stop. If price breaks below the range here, then it will trigger our sell stop. Okay, that's how simple it is. That's basically the buy stop and the sell stop that we anticipate. Now, assuming in the next 5 minutes, there's going to be a news release on the sterling, for example. Do we have the corridor of volatility? Let's do a quick check. I think we have a little bit of a range here. What do? We create a buy stop up top, right? And then we'll create a sell stop below the range. But if you don't see the range, then do not place the buy stop and the sell stop. Okay, so make sure you understand what's going on here. Otherwise, you are going to be in a lot of pain. Okay, so the buy stop and sell stop is actually very easy. You can use it on different time frames. This is on the dollar Japanese yen. Do we see a little bit of an accumulation phase happening? I think we have been looking at a little bit of an accumulation phase happening. Is this the same thing on a 15-minute time frame? In fact, the 15-minute time frame has already broken out of the corridor of volatility on the 15-minute time frame. So different time frame is going to show you different phases of the market. So if I were to zoom out on the hourly time frame, you can see the different corridor volatility. As I said, we need to decide on the time frame. If you're using 50 minutes, then you want to be trading intraday. You go to the smaller time frame, it means you have to get in and out really quickly. You go on the higher time frame, a lot less noise, but you're opening up yourself to a lot more risk as well, because the market range is going to be a lot bigger. So make sure you understand what's going on here. Okay, so those are going to be the example on these buy stop or the stop strategies. Okay, let's continue on. And I want to show you the limit and the buy limit and sell limit strategy. So if we take a look at the example here, we got the local previous high, and you basically need to put that sell limit order there. So if you want to be able to use the buy limit or the sell limit strategy, I highly recommend that you actually watch one of our sessions on SME. Or an SMC, sorry, Smart Money Concepts, right? We talk about order blocks there. We talk about the volatility. We talk about inequality in the market. I think those are going to be a good videos if you want to use the buy limit and sell limit strategies, because I think what's really helpful here is actually to find that resistance area, the support area. Some people call it the supply zone, the demand zone, doesn't matter. It's all the same word, right? But yeah, I want to focus on that. We did about 5 sessions on those. I want you to focus on the order blocks. Once you understand the order blocks, you will be able to use the buy limit and sell limit strategy a lot more efficiently. Okay, now, unlike the breakout, we are anticipating that price will fail at that resistance. So we place a sell order around that area, and you can see what happens here. Price touches it and then immediately falls down. That's not the key point. The example here, what we really want to tell you on this example here, if you take a look at the stop loss, it is actually very small. The stop loss, it's minimal because the positioning on where you open that trade is actually at the support area or resistance area. So your stop loss is actually going to be, yeah, you know what? It's actually pretty much at the very limit of the market. So you're actually risking very small. In terms of the logic behind it, is it safe? The logic here is that you are countering whatever the market is doing. You're going against the short-term trend in the market. But if you understand the logic behind why we want to short that at that level, because there's an order block, there's a resistance, there's a support, for example, then yeah, it makes a lot more sense to take that risk, because if you do it, your stop loss is going to be so small. Your risk to reward ratio is typically beyond 1 to 2. You're looking at 1 to 3, 1 to 4 risk to reward ratio at least, right? But the minimum you get here is that you're going to be looking at a 1 to 2 risk to reward ratio. Okay, so a lot of examples tonight, and I want you to come back here with me on the Euro USD. Right now, because I anticipate the order block to happen there, I can still use the buy stop as a fail-safe mechanism, right? If it fails, then at least I will go in that direction. But if I were to just look at this from a technical perspective, and I look at that as, okay, I think that's a lot of selling around that area, you can see where price progression is. Today, price is touching that area right now, and it's not going anywhere. Obviously, you can use momentum indicator to help you. You can use the stochastics, you can use the RSI to confirm whether or not the market's actually in a trend or not in a trend. But the most logical thinking here is, instead of buying, what if I do a sell limit, right? If I were to do a sell limit here, I can make adjustments on the sell limit here. I can fine tune it. I can just double click on that. You know, I look at the price here. What is my resistance? Well, I'm looking at 1.0335, right? And, you know, if price goes beyond 1.0350, there's no point for me to keep the trade, because the market has broken through and it's likely going to continue to push up higher. Now I can also target the lows where we find a lot of bounces. I'll just make a quick adjustments here, but once I do that, you know, we'll adjust it, because if we take a look at the lows here, again, we're looking at that as a potential resistance. We should be focusing on this one here as our potential support. And this is where we want to take our profits, right? Take a look at the distance on the stop loss. The stop loss here, it's only 15 pips, and the potential profits on this one here is about 43 pips. So you're actually looking at a 1 to 3 risk to reward ratio here, okay? So these are limit orders. So what I anticipate the market is doing is for it to go up and hit my sell limit. Let me get rid of that, right? Once it takes my sell limit, I want it to go down. This is what I anticipate in the market, for example, here with the limit strategy, because there's an order block that it's very hard to ignore around this area here where price just keeps failing, okay? So very similar situation here with the pound USD on the hourly time frame as well. You know, we take a look at this, okay? So where do you think this could pull back to, for example? Well, I think price would potentially pull back around that area. Why around that area? Because we also have an order block around that area there. So maybe it's a good idea to place a sell limit order up top, and then, you know, stop loss, I would place it at 1.2440, for example, right? And my take profit, I want to be aiming at 1.2350, and we'll make adjustments. But yeah, if we modify that, your risk to reward ratio, you can see what's going on here. The risk to reward ratio is actually pretty small, right? We are risking only this much, but we are potentially aiming this much. It makes a lot more sense, right? The risk reward ratio for this kind of orders, it's huge, you know? So this is what we are using the limit orders for. If we know where we anticipate our resistance or where we anticipate our support, then it makes a lot more sense to do this. Let me give you another example here on the Dow Japanese yen. You can see where the Dow Japanese yen has been building a little bit of a base here, intraday wise, right? We're looking at that level. Well, it makes sense if I were to have a buy limit around this area here, right? And in terms of stop loss, maybe I'll keep it really tight. For example, here, my stop loss is going to be at 151. 50, and my take profit here, I want to look at a potential return towards 153, for example, and that's what it is. If I were to do that more, so this is when we use the can we do this during news trading? Yes, we can do that during news trading if we anticipate that price is so close to that and we are okay with losing a little bit for a kind of a huge potential gain. Then yeah, we will deploy the limit strategy. But is it usable all the time? Is it usable without any knowledge about technical analysis? I would say, yeah, it's usable to a certain degree. You're risking a lot if you don't understand the technicals behind the market movement, okay? So just keep that in mind when we use the limit strategy. But this limit strategy here makes a lot of sense because you're looking at a risk reward ratio that's beyond 1 to 2. We're looking at 1 to 3, 1 to 4, 1 to 5. You're risking very little for a lot of potential profit. So sometimes it does make sense, right? Compared to looking at the stop orders. With the stop orders, typically the risk reward ratio, it's more 1 to 1, very close to 1 to 1, because if you take a look at the range there, we are really looking at about 1 to 1 in terms of risk reward ratio here on the sell stop strategy. But with the limit strategy, you're looking at a good risk reward ratio. You're looking at a reward ratio that is beyond 1 to 2. Okay. Let me know if I have connection issues because I think I'm dropping out here. Very slow on my side. It's red. I might stabilize a little bit, but you might lose a few seconds on my side. Okay, I think we're back here. Okay, but yeah, let me know if there's any issues with the connections so we can make adjustments before our live trade tomorrow, okay? All right, so yeah. You can also trade after the news is released. That's basically what we did last NFP as well. The news was released. We look at the numbers. We kind of figure out what went wrong with it. What's really happening, and we trade based on the new information. We can also use the same strategy. We can use the buy limit and the sell limit strategy. Typically, after the news is released, we don't really use the buy stop and the sell stop strategy. We use a lot of the limit strategies, a lot more on the limit strategies, okay? Okay, all right, so let's do a quick test if you guys are following through, but because we are near the end of the sessions, I might help out a little bit and explain this as we go along, okay? So all news can be divided into two categories. What are they? If you know what it is, please answer it, more than happy if I can get someone responding to this, unless you're paying attention. All news can be divided into two categories. What are they? And then the second thing is what type of orders that is actually most often used in news trading. What type of pending orders do you know now? The one that we have talked about. And when should they be used in trading? I'll give you guys a minute here. Well, I'll check if I turn off my camera, does it actually improve the stream? It shouldn't have a lot of impact, but yeah. Anyone wants to answer this? Be more than happy if I can get a feedback from you guys. No? Okay. I'll answer it for you guys on this one here. All news can be divided into two categories. What are they? They're basically the hot, unexpected news and the scheduled news that are typically what we look at in the economic calendar. What type of orders is most often used in news trading? The answer to that is actually the stop orders. The buy stop orders and the sell stop orders are the most often used order type in news trading, apart from market pricing. All right, if you enter on the spot there. All right, what type of pending orders do you know now? You should know 4 pending orders. You should know the buy stop, the sell stop, the buy limit, and the sell limit strategy. When should you use them? if the conditions are prime for a sell stop and a buy stop strategy, for example, if we have that accumulation phase, we have the consolidation phase, we have the corridor of volatility, then we will use the buy stop and the sell stop orders. But if the market is already moving in one direction, we want to look at whether or not the support and resistance is actually a strong one. If it is going to be a strong support and resistance, then we want to use the limit orders. Okay. All right. Okay. So yeah, code is not from 2025. I haven't changed the slides at the end of it, but yeah, if there's any questions, please feel free to ask me on this one here. But we are nearing the end of the session, and hopefully there's no questions here for tonight. All good? Okay. All right, what's next? Tomorrow, we are going to be trading our inflation numbers. So news trading, inflation, that's going to be CPI trade tomorrow. We will talk about the inflation rate. What's the CPI? We will also explain what the core CPI is, and then we will trade real time, not as an example, but real time trading on the inflation number. That's going to be tomorrow. Make sure you are prepared for that. Come in half an hour before the CPI release. All right, I don't know where you are. It's your time zone. Make sure you're looking at the right time zone when the CPI number is actually going to be released. Just to give you a little bit of a hint, join the session right now at this time tomorrow. Right, we end this here at this time. This is when we'll start our session tomorrow. So join in half an hour before that. We'll go through some theory. I'll talk about the context, what we're anticipating, what we're expecting from the numbers, and then we will position our trades before the data is actually released. Okay, so make sure you come early. Don't come too late. Otherwise, you'll miss out on a lot of that trades. Okay, all right. So hopefully I'll see you guys tomorrow, but I think that's a wrap for our theory sessions for tonight. Good luck with the trades for the day, and I'll see you guys here again tomorrow at this time for our live inflation trade or the live CPI trades.